Hey there, Waylon Corco, your friendly loan officer. Just want to record a quick video here for you regarding a home equity line. I've been getting a lot of questions recently as far as a home equity line, like what it is, how it would work for me, how I could benefit. And so I want to kind of record a video just to kind of discuss a few things here. So the first thing being, what is a home equity line? And the second thing is how people can take advantage of a home equity line. So the first thing, a home equity line is an open line of credit that's secured against the equity in your home. So it would be a lien against your home. Essentially, with it being an open line of credit, that means that you're only being charged interest on what you use. So if you have a $40,000 home equity line, but you only charge $20,000 on that, or you only have $20,000 drawn against that, you would only essentially pay interest on that $20,000. So the other thing is the way the payment works, it can vary with each banking institution. Essentially, a lot of ones I've seen have been interest only. So essentially, it would be just interest. If you want, obviously, we recommend paying extra so you can pay down that principal, because if you withdraw $20,000 and you only pay the interest, that balance will be $20,000 at the end of the year. A lot of people like it in that aspect where if they know they're getting a bonus every year, or they know they're getting commission, or whatever the case may be, that they can just throw extra money at it and then just pay interest only in the meantime. So just a couple things there. One thing as far as how the home equity line works, as far as what you may qualify for, obviously we're going to look at debt to income ratio, credit score, et cetera. But one other thing is loan to value. So we're going to look at basically what the value of your home is, how much equity you have available. So essentially, what I've seen with a lot of banks is they'll go to 80 or 90% of the value of the home. So if your home is worth, say, $200,000 and you owe 150 on your first mortgage, that means that you have about $50,000 in equity, but they'll only go up to that 80 or 90% mark. So it might be a $30,000 or $40,000 home equity line that would be available to you. So something to think about. Obviously, you can talk with the banker and they can kind of run through that with you as far as what you may qualify for. As far as why you'd want to do a home equity line and why it could be advantageous for you, a couple things that I'm seeing people do is home improvements. So maybe they're wanting to finish a basement. I know for us, when we finished our basement on our first house, we accessed our home equity line of credit to be able to do that. It was really handy. And then later on, actually, rates actually improved, and we just refinanced and consolidated both of them. So that's what we did in our situation. Obviously, your situation could be different. But if there's some home improvements, whether it's remodeling a kitchen or adding on or whatever the case may be, a home equity line of credit might be beneficial for you. The other thing that people are doing is a consolidation. Obviously, with the cost of everything right now, the costs are continuing to go up. So anything that you can do to improve your monthly cash flow right now is definitely helpful. So if you have some other credit card debts or car payments or whatever the case may be, you could look at taking a home equity line out, consolidating those into one. So if you ever have any questions, I'd be happy to answer anything that I can. Feel free to call or text 605-360-6966. Thanks and have a great day.